This is exactly how I mark out my stop losses and my take profits while trading Forex in the stock market. So here you can tell we have a liquidity sweep on the 4 hour, which usually I'm looking for them on the 30-minute, but sometimes on the 4 hour they also play. So essentially what I do is, obviously after that liquidity sweep hits, we'll scale down to the 5-minute and we'll look for that break of structure. Break of structure is right there, so we have to wait for that to get broken and closed above. Now we can go back and we can look at our possible areas of take profit. First thing I do is I mark out all these fair value gaps, because that's going to be a kind of a big factor showing that price wants to continue going back to the upside. I'm going to mark all those, and then I'm also going to be marking out the highs. So as you can tell, we have a high here, we have a high here, and then we have a high all the way up here. So you want to either target one of those highs or one of those fair value gaps. Honestly, it's really up to you, but let's hold on and wait for this break of structure to get this entry, just to show you guys really quick. I would not enter off of that. I'd enter off of that. And the quick reason why I wouldn't enter off of this green candlestick is simply because it barely closed above. You want true proof that price is actually going to start pushing to the upside. But there's that. Now we can go up and let's just target those first highs, and that's a 1 to 2.3. So I'm going to take that all day every day, instead of trying to go a little bit higher into this fair value gap or higher into this high or higher into this high. I'm just going to target that solely because of the risk to reward. Stop loss is simply just above those, below those lows, and then we sit there and let it play out, and we'll see how long this takes. I'm sure this might be a little bit quicker. Yep, straight to take profit. Didn't come down, hit the stop loss, straight there in just a couple of hours. And that's exactly how I place them. Sometimes, like I said, if I have a lower risk to reward, by lower I mean like a 1 to 1.1, right? I'll go target, maybe a fair value gap, or then maybe even a different high, all depending off of that risk to reward. You can also go to those higher time frames, look where price genuinely wants to go, and if you want to risk a little bit higher risk to reward, go for it. Even if it's a really good setup, I like to only take my lower risk to rewards, just because that's what gives me peace of mind. And we can see where this price actually ended up going really quick, which it would have barely took profit on that first high, then would have, oh my god, boom. So it would have hit all take profits even if you had it up. But like I said, if this is the real market, I'm just sitting down into that those first highs and taking my 1 to 2.31.